We are diving straight into an analysis that's really captured the market's attention. MSTR's $2.8 billion profit explosion and how Bitcoin fueled its Q3.
Yeah.
The core finding is, well, it's undeniable. MicroStrategy posts this massive $2.8 billion net profit for Q3 2025. And it's driven almost entirely by its Bitcoin holdings and these new fair value accounting rules.
That headline number is just huge. It definitely grabs you. But as I was reading through how you unpacked the mechanics of it, I think I see the first big opportunity, specifically around what the company calls intelligent leverage.
Okay.
We need to explain the volatility multiplier that's really at work here.
So it's not enough to just say they use debt and equity to buy Bitcoin. We need to go deeper and actually sort of quantify the consequences of that strategy.
Exactly. While the report, it correctly identifies the source of the profit, a much deeper analysis of that intelligent leverage is needed to really explain the volatility MSTR is seeing.
Right.
Right now, the piece feels a little descriptive. It reports the result, but it doesn't really demonstrate the financial forces that, launch their earnings per share to an incredible $8.42.
I agree. That depth is kind of missing. The material mentions the strategy, it notes that impressive 26% BTC yield, but it frames it as just a positive growth metric. The weakness is that it doesn't fully connect how that leverage magnifies both the reported unrealized gain and the inherent risk that comes with fair value accounting. And just to be clear, when we say fair value profits, we're talking about non-cash on-paper profits, right?
Precisely. And that's a crucial point. The material has to keep reinforcing that this is a paper gain, which, only amplifies the risk when you've got this much leverage involved.
So it's descriptive, not demonstrative.
It is. The reader gets the what, but they don't feel the acceleration. The real question is, how fast does a move in Bitcoin's price translate into a wild swing on MSTR's income statement? That's what's missing.
That idea of speed, of transformation, that's key. So to fix this, our suggestion is to strengthen the piece by explicitly modeling how their financing activity accelerates the impact of Bitcoin's price on metrics like EPS.
Right.
That's how you explain why that 8.42 number just blew away analysts' expectations. It's not just Bitcoin going up, it's Bitcoin going up on a foundation of debt.
And to make that really actionable, we need to show the math, but simply. We know their average cost basis is around $74,000 per coin. So I'd suggest building a hypothetical sensitivity analysis right into the text.
But is there a risk there? I mean, does modeling volatility get too complex for this kind of analysis? You don't want to turn it into a statistics lecture.
That's a fair point. And it's why it has to be illustrative, not exhaustive. We don't need some complex model. We just need one dramatic number.
Okay.
Show the immediate impact of, say, a simple 10% move in Bitcoin, up or down, on their net income. Especially with a hoard of 640,000 BTC. The number will be huge.
And that really highlights the difference, right? It shows how that leverage makes them so much more sensitive to price moves than, say, a simple Bitcoin ETF would be. It's not a one-to-one play.
Not at all. And you've already got the BTC yield metric in there. That 26% growth in holdings versus shares, that's a fantastic number.
So use that as the starting point.
Yes, use that to link their strategy directly to the volatility in that $3.9 billion operating income. The goal isn't just to report the strategy, it's to quantify the sheer speed at which MSTR turns paper gains into reported profit. That's their edge, and it's also their biggest risk.
Yeah, focusing on that acceleration would seriously deepen the rigor of the whole piece. The $2.8 billion story suddenly has much higher stakes.
It makes sure the reader understands MSTR isn't just holding Bitcoin, it's a financial accelerator engineered for extreme exposure.
Okay, let's shift to the structure of the piece, especially how the risk is handled. The analysis does a great job on the profit. It includes those bullish analyst targets up to $630, but then it saves the whole premium risk warning for the very end in the bear case section.
Yes, the flow there needs a little bit of refinement. And that's our next big opportunity, I think.
To elevate the sophistication and robustness of the analysis, the significant premium risk currently mentioned in the Future Outlook section should be structurally integrated much earlier, framing the massive profit announcement within a context of immediate valuation tension.
That's it. Right now, the report presents the huge net income and the bullish price targets as these sort of standalone facts. And only later does it drop the warning that MSTR trades at a huge premium to the actual value of its Bitcoin, to its NAV.
And that sequencing, it risks giving the reader an overly rosy picture at first, which kind of weakens the critical analysis when it finally shows up. It feels like an afterthought.
We need a more balanced narrative. When you report that historic profit, which is already a nuanced topic because of the accounting, you have to immediately introduce the caveat.
Right.
The caveat that MSTR's valuation reflects not just the Bitcoin, but the market's willingness to pay a premium for their strategy. And that premium itself is a huge risk.
So how do you do that? How do you bring that tension in up front without, killing the drama of the big headline number?
You just pull the counterargument forward. For example, in the executive summary, right after you state the net income, you could add one sharp sentence, something like, if that premium collapses, the stock could drop sharply, even if Bitcoin stays flat.
Huh. Yeah. That one phrase immediately adds a layer of complexity. It makes the author look more credible, too.
It does.
And we should probably rethink how the analyst targets are presented. Instead of just listing them in a bull case, maybe put them in direct contrast with the premium risk.
Absolutely. Explore the threshold where that premium becomes unsustainable. The question shouldn't just be what the targets are, but why the market is willing to pay this premium to own Bitcoin through MSTR instead of a cheaper vehicle.
Right. Is it just hype, or is it a calculated bet on their management skill at using capital markets? That question needs to be central to the analysis.
And if the premium is justified by management skill, then the analysis has to immediately tackle the risk that comes with betting on that specific team. By integrating that tension earlier, you establish the complexity of the MSTR story from the start, not as a footnote at the end.
Okay, moving on to our third point. Let's talk about the chasm between the old software business and the new treasury operations. The data you have is shocking, and the analysis needs to lean into that imbalance more.
The disconnect is just massive. I don't think the current draft uses the numbers to their full potential. The author is maybe being a bit too diplomatic when the numbers are just screaming the truth.
So the argument here is that the analysis needs to quantitatively underscore the extreme disparity between the performance of MSTR's legacy software business and its current role as a Bitcoin treasury company.
Correct. The material says the software business is now a fraction of the company's total financial engine. But, that's such an understatement.
Yeah.
You've got the data, $128.7 million in revenue on one side versus $3.9 billion in operating income from digital assets on the other. That disconnect is almost paradoxical. It needs a much sharper emphasis.
This is where a simple, powerful ratio could really create a visceral image for the reader. We need to define the company's financial reality today.
Absolutely. Use the metrics to create a stark comparison that just highlights the scale of this identity change. Let's give them a hard metric.
Okay, well, we can calculate it. The $3.9 billion in operating income from the gains, it's roughly 30 times greater than the $128.7 million in revenue from the actual software business.
30 times! Explicitly stating that ratio 30x will shock the reader. It drives home the point that MSTR's valuation is now totally decoupled from its product sales. It's like comparing the revenue from a small, successful cafe to a lottery jackpot. They're just two completely different scales of business and risk.
It's statistical noise at this point.
The software business is statistical noise compared to the swings in the treasury. Exactly.
And that 30x ratio completely changes how you look at their strategic roadmap, right? The critique should push the author to analyze their future plans. Digital credit markets, MicroStrategy AI, through the lens of this huge imbalance.
Precisely. If the treasury is the real economic engine, you have to ask a critical question. When they talk about integrating Bitcoin analytics into MicroStrategy AI, is that really about boosting the $128 million software business? Or is it about supporting the treasury operation, managing their 640,000 BTC more efficiently?
That adds so much necessary depth. It forces you to think about where the capital and the brainpower are really going to be focused. The data suggests the answer is overwhelming.
It forces the realization that the software company is now, it's essentially a shell or a mechanism to execute their capital market strategy. It's not a standalone growth engine anymore.
And finally, when citing the executives, the text really needs to reflect that tension. The tension of managing this tiny software firm alongside a multi-billion-dollar high-volatility treasury. It's two completely different business models.
By quantifying that imbalance with the 30x multiple, the strategic shift stops being a qualitative story and becomes a stark, unavoidable financial reality. That's what will make the analysis so much more impactful.
This has been a really necessary deep dive. So to summarize for our listener, we've identified 3 key areas to really maximize the impact of your analysis.
First, go deeper on quantifying that intelligent leverage. Don't just report it, model the volatility. Use that 10% sensitivity analysis so the reader feels the accelerated impact on EPS.
Second, restructure the narrative. You need to integrate the premium risk, that bear case warning, much earlier to create that narrative tension right from the start.
And third, sharpen the distinction between the software business and the treasury. Use that stark 30x ratio to define the financial identity shift, and then use that imbalance as the lens to examine their entire future strategy.
These are high-level, actionable suggestions aimed at taking your piece on MSTR's historic quarter to the next level.